Futures still point to the green side of things. We're up 170 on the Dow, 150 on the Nasdaq. Keith Fitz joining me now. All right, Keith, the Buffett indicator, as in Warren Buffett, it suggests that stocks are overvalued. What do you say to that?
Oh my goodness. At the risk of committing financial heresy, Stuart, I think that thing is a relic. Number one, most of the 50% or so of the sales of the Magnificent Seven and other S&P 500 companies come from overseas. When you put international companies back into that calculation, the ratios drop. Number two, the markets have changed. So tech and digital investment are not reflected in the way that calculation maneuvers. So that's strike number two. And finally, strike number three, low rates and changing structural composition of our global marketplace render that thing moot. So I don't pay it a lot of attention. It's an important data point, but not much else.
Okay. How about Intel? I believe you're shorting it or saying avoid the stock. Why do you say that? Everybody's trying to give Intel money.
I know. And this one's just one of those things I learned from a mentor a long time ago. When everybody knows something, Stuart, you want to check on what's on the side of the trade. You know, Intel and NVIDIA, Intel and the government, you're taking an organization that is an engineering culture, that is engineering bound, that has missed many of the great tech changes in the last decade, and suddenly you're expecting it to blossom. I think the stock is just technically overcooked. There's too much money looking for it. I want to go to the other side of the trade.
Would you actually short it? Would you bet on it going down?
I'm hunting for an opportunity to do that this week because I think it's going to be like mixing oil and water. I think the stock falls.
Okay. Let's have a look at Tesla. I believe you're still a bull on Tesla. It's at $440 a share now. Where's it going?
Well, I think it's going to take out 600 first, which you and I talked about some months ago. But then from there, I think it's 3 to 5x. You know, the robotics, the FSD, the autonomy, the data. The people are thinking about Tesla as a car company, may as well call Apple a computer company at this point. Cars are going to be a fraction of what they do a few years from now. So I think revenue 3 to 5x. I think the stock 3 to 5x, 2030, 2032 at the latest.
When do these robots from Tesla or from Musk, when do they actually start appearing in factories?
Well, I wish I knew, but my understanding from all the scuttlebutt I'm hearing is that they're a lot closer than people think. I think that's very deliberate on Mr. Musk's part, but I think that every engineer, every CEO, every manufacturing organization is looking very carefully at how those robots are going to work with the human labor force, not replace it.
And does SpaceX figure into the stock price of Tesla at all?
I think it does, but more from the social media crowd. They're technically different companies, but I believe because of the way I understand Tesla is being built, that there's a lot of cross-transference of data, there's a cross-transference of engineering, there's a cross-transference of value. So yes, it does, but not directly.
And you're buying dips whenever you see them on the market, is that correct?
Yes, I am, Stuart. Yes, I am.
Well done. Good to see you, Keith. We'll see you again real soon.